This question is asking about an example of inherent risk. Now, where does inherent risk fall into the audit model? Well, we should remember this visual, right? Remember, when we combine inherent risk and control risk, that creates the risk of material misstatement that is assessed by the audit team. Now, inherent risk is something that even the company themselves assess, right? These are things that are just fundamental nature of their business. And then from there, they would implement controls to help mitigate that risk. So when we go through, think about stuff that's just the nature of the business. It's the nature of being in business. It could be unrelated to their business, like the economy or governmental regulations. But those are things that are inherent, meaning they just naturally occur in the course of business, right? That's what we should think about when we see inherent risk. So we'll go through and figure out which one is going to be the correct answer here. How about technological developments that may render inventory obsolete? Now, this is very common for every business, right? And the whole idea of research and development and improving your product is to both, solidify your own market presence compared to competitors, but also to keep improving your own product. But in that case, right, it may render inventory you have on hand obsolete. Think about the iPhone, right? The iPhone originally came out almost 15 years ago. Do you think they're still selling the original model? No. They're selling advanced models, and that's to keep the iPhone cutting edge. Now, what happens when they come out with new iPhones is that they may have inventory on hand that is now obsolete because nobody's going to buy them, or they're no longer supported by the current Apple technology. But that's just the normal course of business. That's the nature of being in business. That's an inherent risk. And even with controls in place, you can't really avoid that risk, right? So that is a great example of inherent risk, but let's check on the other ones. How about an incorrect formula in a worksheet used to calculate a LIFO inventory reserve? Well, that's something that actually can be controlled by the company as a risk, right? The risk is that it's incorrect, so they can put a control in place to make sure that this, LIFO inventory reserve worksheet is properly checked for formulas. So if that fails, that's not an inherent risk, that's a control failure, so that means it's a control risk, right? So that's why that option is incorrect. How about posting of unauthorized journal entries? Again, the company could put a control in place so that journal entries are properly authorized before they are posted. So that is a risk that can be addressed by controls. So that is a control risk and not an inherent risk. And then this last one says inaccurate physical inventory count. Yeah, errors could be made, but the reality is, again, controls are in place to make sure that we have an accurate physical inventory count. So if there is an inaccuracy, well, that's not inherent risk. That would be a control risk, and that should be addressed by controls, right? So those are examples of control that, if they fail, that's control risk, right? They can all be, mitigated by proper controls that are operating effectively. So that's why all three of those are incorrect. So going back to the only one that represents an inherent risk, that's going to be technological developments that may render inventory obsolete, right? There's not much the company can do in that regard, especially compared to competitors. Now, when we look at our visuals, some other examples would just be high volume transactions, cash transactions, large amounts of estimates, complex transactions, the economy, right? Another example would just be government regulation. These are just inherent or the nature of the business, right? There's not much you can do other than identify those inherent risks and then implement controls to help mitigate those risks, right? So again, very important to understand the audit risk model here, especially, what's an inherent risk and what's a control risk. The exam will certainly test you on this like a question like we're seeing here. So be familiar with this model.